So, are you ready to supercharge your portfolio with dividend stocks that could potentially double your money in just 5 years? In today's video, I'm going to review the top 5 dividend powerhouses that are not just beating the market, they are absolutely crushing it. Take a look at this chart. I have modeled out these 5 stocks as a combined investment, putting 20% into each and compared it to the S&P 500 over the past 5 years. Starting with a $10,000 investment in each option, our Dividend Superstars outperformed the S&P 500 by a jaw-dropping margin. While the S&P 500 would have turned your $10,000 into about $22,000, these dividend stocks more than doubled that, skyrocketing to over $51,000. That's almost a 132% outperformance. But here's where it gets really interesting. In the best year, our dividend champions achieved an almost incredible 57% return, while the S&P 500 only reached a 31.33%. That's nearly double the performance. During the worst year, our picks dipped to minus 80.5%, just slightly below the S&P 500's minus 80.23%. But don't forget the downside and the importance of staying firmly grounded in your strategy. Now, here's an important point: the maximum drawdown. Our dividend portfolio had a steeper drop of minus 27.87% compared to the S&P 500's minus 23.95%. This shows that even carefully selected stocks can experience more short-term volatility. But remember, it's the long-term performance that counts. Despite this larger drawdown, our dividend stars still outperformed the market overall. Now, I know what you're thinking. This sounds great, but how did you pick these stocks? Did you throw darts at the Wall Street Journal? Well, I'm glad you asked, because I didn't just pick these stocks out of a hat. Although, let's be honest, that method might outperform some fund managers, right? No, I used the latest data and updates, which I will share with you in a minute. We looked at a minimum of 5 years of performance data and dividend ratings, because in the world of investing, 5 years is practically a lifetime. Just ask anyone who bought crypto in 2022. But enough chit chat. Let's dive into our first dividend superstar. It's a company that's not just riding a tech wave, it's making the surfboard. Number 1, Broadcom. Dividend yield 1.14%. The 5-year performance turned $10,000 into over $79,000. Key points: global leader in semiconductor solutions and infrastructure software. With a recent acquisition in cybersecurity, they are positioned at the forefront of one of the hottest sectors in tech. If you had this in your portfolio, you will probably be looking at your results today and literally say to yourself, "Holy smokes, this is incredible." Now, if you think that's impressive, wait until you hear about our next tech giant. It's a company you are probably using one of their products right now: Microsoft. Dividend yield 0.66%. 5-year performance 28%. Key points: not just a software giant, but a major player in cloud computing with Azure. Their recent push into AI with Copilot is estimated to add an extra $10 billion a year for the next 2 years. Microsoft will benefit a great deal from early adoption of AI, adding a lot of momentum to their already fast growing stock. So if you believe that AI is the future, this could be crucial for you. Speaking of tech giants, our next company is the hero behind the devices that power our modern world. In fact, there's a good chance the device you are watching this on wouldn't exist without them. Number 3, the Taiwan Semiconductor. Dividend yield 0.85%. Market share over 59% in semiconductor manufacturing. Key points: the largest semiconductor manufacturer with the highest margin rate among competitors at over 52%. They are expanding globally to mitigate geopolitical risks. Their performance is stellar across the past year, 3-year, and 5 year periods. It's a tech company that actually pays dividends. But why stop at hardware when we can dive into the companies that's revolutionizing our wireless world? Our next company is the powerhouse behind the 5G revolution and the brains of your smartphone. Number 4. Qualcomm. Dividend yield 1.43%. 1-year performance over 94%. 3 and 5 year total returns both are over 20%. Key points: they are leader in semiconductor designs and telecommunications. Their Snapdragon processors are in countless Android devices and they produce 5G modem chips for Apple. You are getting a great return and a very healthy dividend. It's really the best of both worlds. Now let's switch gears from the tech that's changing our world to the science that's saving lives. Our final dividend stock is a pharmaceutical giant that's not just treating diseases but potentially curing them. Number 5. AbbVie. Dividend yield 3.54%, the highest in the group. Key points: global biopharmaceutical company with strong presence in immunology, oncology, and neuroscience. Their flagship product Humira is used to treat various autoimmune diseases. Given the potential for major breakthroughs in medicine, I believe many pharmaceutical companies will have tremendous growth for years to come. AbbVie is positioned perfectly for this trend. So you now have the knowledge to potentially outperform the market. The power to shape your financial future is in your hands. But wait, before you rush off to reshape your portfolio, we need to address the elephant in the room. Investing in just 5 stocks, no matter how impressive, is like navigating a storming sea in a small boat. For most investors, diversification isn't just a fancy word. It's a shield against the unpredictable roller coaster of the market. Spreading your investments across many stocks or sectors is like wearing a seatbelt while driving. Sure, you might not need it most of the time, but when you do, you will be really glad you have it. But don't worry, I'm not leaving you hanging. If you're looking for a way to tap into high growth potential while still staying diversified, I've got just the thing for you. In our next video, the best AI ETF for 2024 you shouldn't miss, we are diving into the cutting edge world of artificial intelligence investing. We will reveal an ETF that could give you exposure to the explosive growth potential of AI, all while keeping your risk spread thinner than your patience on Monday morning. Don't let your portfolio miss out on the AI gold rush. Your future wealthy self will thank you later.